Before we start the video, make sure you subscribe for our trading and investing course. We're going to have major guests like Tom Nash. We're going to have an accountant. We're going to have millionaire day trader and more guests. So we look forward to seeing you. There's a link below for the day trading course and investing course. Make sure you sign up. Thank you. Hey, I'm Juan. Thank you for joining me. Today I want to discuss SENSEONICS and why I think it's getting ready for FDA approval. There's a lot of clues happening. I recently did a video and talked about it from a technical analysis point and how it needed to close above the 200 moving average. It finally closed above the 200 moving average. And I showed on the chart, last time it closed on the 200 moving average, it started its uptrend. So that was one positive thing. There's been insider acquisitions, and we have another clue that's showing that something is happening with SENSEONICS, and I believe that FDA approval is imminent. So let's take a look at the chart. The last time here, this blue line is the 200 moving average. So last time here, it broke above it. That was all the way in December, and it just started its uptrend. And it stayed above the 200 moving average. You see here, it got close to it, but stayed on the uptrend. And this white line that I put has been strong resistance. 418, it broke it here finally, but it broke it through here. It wasn't able to break it here, here, and here. So 418, 419, there's major resistance. But all the way until November. So from December to November, and this was December of 2020, all the way to November, it finally broke below the 200 moving average. And from November to just recently, it stayed on a downtrend. But now, for the first time, it broke above the moving average, above the 200 moving average. The 200 moving average is 306. So what you want to see now, you want to see it maybe get close to it like it did here, but just stay above the 200 moving average. So as long as it stays on above the 200 moving average, then we know that this is on an uptrend. The technical analysis part of it confirmed that it's possibly going to be on an uptrend. Another big piece of news was the 13G filing. So what is a 13G filing? It's basically anytime an institution or an individual makes an acquisition of shares and it's larger than 5%. Larger than 5%, but below 20%. A 13D would be above 20% acquisition of shares, which is a very large percentage. That person will have voting power. But with the timing, SENSEONICS about to get FDA approval, this company, BlackRock, invested and purchased over 30 million shares, which represents 7% of class. So we're talking about investing close to $95 million on SENSEONICS at the price that it's trading at right now. That tells me that they know FDA approval is about to come and that their investment is going to bring them profit. My final thoughts for SENSEONICS is that FDA approval is coming very, very soon. I know it was expected a while ago, but even the company and the CEO expected it to happen a while ago. COVID pushed everything back, but I think they're caught up. I've seen FDA approvals happen for other companies that are similar. I think it's coming very soon, and that's why you have the activity. You have more volume. You have the short interest declining, and I think this is going to be a great company. What we want to see after they get FDA approval, if you just want to take your quick money and then reinvest in it after it drops and you want to stay long term, there's a few things that have to happen. You have to see the revenue increase. You have to see as they get that 180-day approvals that they're getting sales up, but also their net income is increasing because they spend a lot of money on research and development, on selling general and admin costs. So we want to see that net income increase. We want to see that revenue increase. We want to see sales increase. We want to see their free cash flow increase. We want to see them take care of some debt. And hopefully down the line, maybe a couple years down the line, hopefully they start building free cash flow and they start buying back some of the shares that they diluted so many times. And then we can see major growth. But that's going to take a while. It's a long road. Right now, if there's any spikes, any big run-ups, it's because of hype, it's because of excitement, it's because of people seeing the FDA approval, and that's not going to be sustainable. That's not going to last. In order for it to be sustainable, last, and make it a long-term investment, you have to see those things that I mentioned. You have to see the revenue increase, sales, debt decrease, free cash flow increase. It's not going to get to Dexcom level. Dexcom's different market cap, different shares outstanding. Dexcom's a beast, and it's not going to get to that price level. but hopefully we can see major growth if those things happen. Thank you for watching my video. Hope to see you on the next video.